Vale, thanks, Lorena. Hi, everyone. Well, the fortunate thing here is that at least I'm not coughing. I've actually been with COVID. So today I had some very good news. I actually tested my oxygen saturation level, got to 98, right? Which is like normal, but I haven't seen that for the last few weeks. So I'm getting better and everything's fine. First thing is some of the slides are have some small writing on them. If you change your setting in the bottom right to the full screen, you might be able to see them a little bit better. Okay, and with that, I'll just crack on. I'm not going to say very much about EKON. We're one of the sponsors, as you know, of this particular event. And we have a series of sort of market regulatory type reviews and assessments. Unlike what some of you may have heard me speak on before, today I'm not going to be discussing issues around where prices are going and various aspects. I really wanted to touch on some of the more other interesting, slightly under the radar type approaches of how to make a bit more money in the Spanish electricity market. The focus is on, say, having a PV plant and thinking about how it is that you can access various alternatives. There's been quite a lot of discussion around and focus around, the day-ahead market and how to hedge your exposure using PPAs. And now we're going to have the auctions. But I think there are a number of other elements that should be brought, which should be interesting for people to think about. So just a little bit of context. What do I think the lesson is of 2020? In particular with COVID, embrace flexibility, right? I know that the banks don't like that. We'd like to have a secure offtake agreement with a credit-worthy offtaker. That's challenging, okay? The charts on the left, I've presented it before. What you're actually looking at there are the dispatch profiles in the top left of wind and solar. These are daily numbers, by the way. In the middle, you have the nuclear, and in the bottom, you have the hydro and the combined cycle plant. This is actual hourly data, daily data from Red Eléctrica from Spain. And the the black squiggly line is actually the electricity price, the day-ahead electricity price. And what we can see with that is, anything can happen. So surprise, some things that are obvious are that if there is a lot of wind in the system, prices tend to be lower. Surprise, nuclear power stations are more flexible than one would have given them credit. When prices dropped, they actually decided to stop producing as much. And the pivotal role of flexible hydro and combined cycle power station, that's the same. So those type of stories are quite similar to what I've said before. But today I wanted to focus on one element, which is we tend to focus on an energy-only market. We have that here. And I think there's a big issue around how do we recover our fixed and financing costs if most of the power stations on the system are going to be operating on a must-run basis because they've got very, very low marginal cost. If the wind blows, you dispatch. If the sun shines, you dispatch. And that brings me into four things I want to talk about. One, ancillary services. Two, vertical integration. Getting into retail, capacity market. Being paid for being sure you can be providing capacity into the system. A little bit different to ancillary services. So that's coming soon or at some point in time. And then this element of, green certificates. Could you have a market for green certificates and how will that work? Ancillary services already operational as of today. Vertical integration, sure. You can go and buy or set up a retail company or a supply company, as we call comercializadora in Spanish. A capacity market, I know things are a bit more speculative, but some of them less speculative than you think, and therefore they offer options for how it is that you might be able to sort of boost your remuneration. Let's talk a little bit about ancillary services. I said lots of words, but don't worry about it. You'll be able to read them later. The thing to bear in mind here is what are the ancillary services and when do you contract for them, right? Ancillary services are services which are provided to ensure that the system is balanced in real time. And the main operator of those markets is not the market operator, is actually Red Eléctrica, right? The system operator. And this is basically a model which exists across the whole of Europe. So there's nothing new. You just be aware of the type of thing. So for example, we know that there's a day ahead market, but as soon as that closes, we've actually got a restrictions market, technical restrictions, and then obviously figuring out what the interconnection capacities are going to be. Red Eléctrica does that. There's a series of day ahead as well, ancillary services such as secondary and tertiary reserves. Secondary spinning reserves are sometimes called. Tertiary reserves, like contingency reserves. They have different names in different jurisdictions. In Spain, secundaria and terciaria. And then when in the actual day of dispatch, you actually have other markets which come into play on the ancillary service side. So everything around real-time management, making sure that there's any deviations or any technical constraints. So one of the main questions is, if you're the thing to bear in mind is if you have a technical proven capability, you can play in these markets too. It's a fact that PV has played hardly any role at all in these, but wind does, so why the hell not, right? So now the question is, how valuable are these particular services? The chart in the top left is basically the division or the buildup of the final electricity cost stroke tariff, the energy component thereof, according to Red Eléctrica, right, or me, and they use it for the determination of energy retail cost. This is a window between 2010 and 2019. And you'll see that the bit of the component at the top, most of the energy value comes from the day ahead market. Okay, el mercado diario. But if you look at, say, that little component of blue at the top, servicios de ajuste del sistema, which is ancillary services, you'll see that there's another plethora, 1, 2, 3, there's a whole bunch of different types of services which are also provided, which do end up being paid for by the final consumer. Now, two things. Some of these ancillary services are more valuable than others. And the other thing to bear in mind is that they may seem to be a very small component of the final electricity price, but they can represent a very significant amount of income, right, to some of the generators that really require them. So on that premise, who are the types of generators, or by technology, if you will, which type of technology is the one that's most likely to be providing these type of services? And here we're just highlighting some technical restrictions, tertiary imbalance management, real-time restrictions. Technical restrictions, restricciones técnicas, are the biggest. Red Eléctrica takes a look at whatever everyone thinks they're going to be doing on a day-ahead basis, and then goes into its system model and basically figures out, can we get as close as possible to the commercial arrangements that have been agreed, both by bilateral and day-ahead market? And if not, they make certain They basically use the restrictions market to balance things out. I'm going to leave it at that without much more of an explanation. Okay, and what you see here is that coal and combined cycle power stations, especially on the technical restrictions, the F1, right, which is like the instantaneous one. This is the first one they call upon to make sure that they're meeting their N-1 constraints, voltage support, and all these other wonderful things. So Red Eléctrica makes sure that everything's going to be technically feasible. And historically, the most of the allocation of the volumes of energy or stroke capacity go to coal and combined cycle plant, mainly because of their location, I have to say. So if you think about Spain, we know it's a peninsula. You may as well think about it as an island, but we have a lot of cities on the edge, by the seashore, in other words. And if you have an embedded combined cycle power station in one of these particular locations, clearly they're going to be more expensive to run than if you're basically going to be buying power from renewable generators further inland. Now, the story to be aware of at that point in time is that what happens if the line that's taking the energy from inland Spain to the border city, right, basically fails. And at that point in time, you need to be able to count on, say, the embedded generator to be able to pick up the slack. And that's why location becomes very important to some of these sort of combined cycle power stations. So gas natural, for example, or Naturgy now would be a sort of one of the major beneficiaries of these. And EDF, coal-fired power stations in the northwest of Spain are also are still, depending on whether they're closed or not, most of them are closing. Now, notice that in the technical restrictions number 2, right, so F2, we have much more of a mix of different types of technology. And the one I'd like to just highlight is look at wind. So it's a proportion of the energy that's being provided to meet this sort of second technical restrictions. Wind plays a very important role. And even the cogeneration plants, in other words, embedded generators that are basically using steam offtake for their own industrial purpose as well. These guys are also in a position to provide flexibility solutions, if you will, to the system operator. And that obviously wind is a very large component of the installed capacity in Spain. But if you did have a lot more solar coming on, then you'd expect them to be able to pick up a bit of that slack as well. So just to be aware that that it's not, there is this other world, I suppose, out there, which could provide some sort of interesting additional opportunities. Now, vertical integration. Beyond PPAs, and we want to hedge ourselves. We're not very happy with, as a developer, let's say, we don't want to expose ourselves to volatile spot markets. So we're looking for medium long-term PPAs, which we can take to a bank and finance. And of course, now we have the whole discussion around auctions backed by the Spanish government. Are there other ways in which you can reduce your exposure to the spot market? And the answer is sure. Serve final consumers directly. So the logic's quite simple. This chart I already showed you before is basically the build-up of the final energy price. Well, imagine that your LCOE, your all-in cost of your PV project, is somewhere between 25 and 40, depending on the particular characteristics and your financing assumptions. So if you can basically produce energy somewhere at the bottom end of this particular box from a price perspective, then clearly, at least at first glance, the system is basically assuming, or the final consumer is basically willing to pay up to, say, 45 just for the mercado diario component, assuming the rest of them you just can sort of pass the cost through. Okay, so if you're just looking at the orange bars, so any distance between the top of the orange bars and wherever you sit in the sort of black box, there's a margin in there that you should be able to capture. Okay, but it's not that straightforward. Especially two things to worry about. The first one is there's plenty of competition. Okay. This chart is one that's actually published by CNMC, which is the energy regulator. I find it particularly interesting because it shows a position of purchases and supply, and hence the net position of the major suppliers of energy in the Spanish market. So, for example, if you look on the left, we've got 11 years or so of Endesa. Okay. And if you look at the sum of the dark blue and the light blue, you have these little green bars. The green bars represent the net position. So Endesa effectively is like a net buyer of energy. Okay, so they have more customers than they do generation sources. And now that they've closed down all the coal-fired power stations, it's going to become even more extreme. So then the question is, well, they have a problem because they're actually in the opposite position of most of the independents. I mean, by the independents, otros, and this right in the middle. So you have basically a lot of other independent generators which are basically which are producing electricity and selling it to somebody else. Okay, but if you look at the strategy of the other big four, the Iberdrolas or the EDPs or Naturgy, Viesgo, which has actually been bought by Repsol, so we have to bundle them together. Now, if you look, they're actually much more balanced. So they're in a position to try and reduce their exposure to the spot market because they have a retail arm, which effectively, they don't mind too much how much money they're making in generation. What they're really looking at is to hedge their exposure and basically make their margins at retail. So the question is, can you do that too? And the answer is sure, but it's a different business model. Okay, so this chart that you have on the left-hand side, it's not represented, it's actually real data, but you'll notice I've got something called normalized demand and supply on the left. And what that's basically showing you is what the actual demand was in the hours of March 2020. But don't worry about the height, just look at the shape, the relative shape. Okay, so we have like a dual peak system. We have an early morning peak and then we have the evening peak. Okay, so roof of the house with a chimney, as I like to call it. You may have heard me use that expression before. The solar dispatch, these are actual real numbers at the hourly level for March 2020 is shown in the blue area chart. Okay, so you can see you have a complete disconnect between the customer offtake, which you're sort of trying to meet more or less, well, assuming you're going into full residential, I suppose you could be lucky, and find some other type of person who'll just buy your power, but they'll ask you for a discount, which is what you find if you look at PPAs on a pay-as-produced basis. It's about a discount of like €4 or so if you want it on a pay-as-produced basis. Another story. I'm not going to go there today. And then you have this green line. And the green line is the actual day-ahead price. So it's a day-ahead price, but it's an hourly price, okay? So when you look at, say, the solar dispatch is going to cover sort of demand here, you're going to suddenly find yourself, if you did have a sort of retail business, that you're going to find yourself in the evening peak completely unable to use your solar generation for that purpose. And you're going to have to go to the market to buy it. And at some point in time, that evening peak was costing you somewhere like 25 to 30 euro per megawatt hour. And then another point in the month of March was basically 40 to 45. Okay, so there's a lot more volatility implied in that. Now, because these businesses tend to be asset light, and because of this disconnect between the profile shapes and the risk you're taking having to buy from the spot market, you're going to have pretty big working capital requirements. It's not a business for everyone. Okay, and the other thing to bear in mind is, how do you sort of overcome this particular problem? Well, you grow a portfolio of diverse generation resources, but obviously that's not a game everybody can play because you're talking about some major investment requirements. So be careful what you wish for. I'm not going to go over this, but feel free to have a look either in Spanish in the report here. I've done my best to try and translate it into English. These are margins which the regulator tries to determine as to how much money as a margin is being made on sales to domestic pymes, small and medium-sized enterprises, and then industrial customers. Okay, so you get a bit of a feel. This also confirms that there's a hell of a lot of retail companies sort of serving those particular markets, even in the free. There's a free and there's a sort of captive customer base which decided not to switch, low-income households and things like that. I'm not going to go any more into it. Capacity market. How does a capacity market work? Well, you remember you got to sit. I'm looking at the charts bottom left. There's an energy market where you stack the different offers from the different generators. There's a price given to you, P1. On the capacity side, you have a different thing going on. So what's the value through which you would be willing to sell firm energy to the system operator? And you'll notice that the ranking is quite different in the right-hand side than in the left-hand side. Let me explain that. Do you see the energy margins that are being made in the energy market? Well, what you do is you basically offset them against whatever your fixed costs were of operation. And so it's actually your supply capacity curve is actually the red line has to net off whatever you're expecting to make from any other sales in the energy market. So if then the system operator says, well, look, I need a certain amount of firm energy, and at this point in time, we have another price, CP1. So we have a CP1 on the capacity side, and we have a P1 on the energy side, and they both sort of work together. You can't know one without knowing the other. It's effectively what I'm saying. How much value could there be in this? Not a hell of a lot, because if you're just a renewable generator, PV specifically, what can you do? And the answer is, well, I reckon you probably get at least, €1 per megawatt hour more. Now, first thing to point out, can't discriminate. Okay, can't discriminate. PV will be allowed to participate in this market. It has nothing to do with Spanish. It's actually a European regulation, which you already know about. And if you haven't heard stories, even demand side management can play in this. So there's a lot of opportunities for you to sort of figure out different ways. And obviously makes a difference if you're in a position to sort of start thinking about adding batteries to your production profile and spreading it out, because it means that you can participate in that market. We shall see. There's lots of different issues. The Spanish government put out a sort of series of questions as a pseudo consultation proposal for this, but we still don't know how they're going to do this, or at least I don't. But there's this complexity around, we have to basically think about setting this market up with Portugal. And so it requires a lot of interjurisdictional issues that haven't been yet sorted out. I'm not going to go through the rest of it. Right, green certificates. And what's the idea around green certificates? Well, we know that in Spain there's the garantías de origen, right, which have fairly low prices because it's basically a voluntary market, so who cares? But imagine that the government turned around and said, forced or implemented a sort of renewable portfolio standard. A certain amount of your energy which you supply to the final consumers has to come from renewable resources. Okay, so we have these GOs, and the GOs as if by art of magic, I mean, just magically speaking, will have potentially a positive value because you've created a demand for them. Now, remember, but this requires an enforced penalty. You're basically creating a market where there was none before. I know that people will say, yeah, but I'm trading and I'm selling my GOs. And I'm like, okay, it's great. But if you think €1 per megawatt hour is a lot, right? That's, fine. But I mean, at the end of the day, the question that I have is, can it actually become something quite different? And the answer is sure. And in case everyone says, oh, well, green certificate markets don't work, says, sure, if you don't design them properly, there tend to be failures. But there's plenty of them which work perfectly well and acceptably, right? It's just don't focus on Poland and Romania. You just go international and find out. The other one is, well, it's an artificial market. Yes, and so is the market for carbon dioxide in the European Union, so the ETS. And in case you didn't know about it, there is an enforceable penalty, like €100 per ton, right, in the case of the UEAs. And that creates certainly an interest in people being able to trade. Now, how would it actually work? It's a bit complicated. Be sure that you'll be able to watch the video afterwards. Same chart that we saw before without any renewables. Some of you have heard me talk before about the saturation point, which is basically where you allow as much renewables to come into the system until the realized price for them basically is equal to their LCOE. That's what I'm representing here. I'm forgetting about the volatility and intraday issues. I'm just making things nice and simple so we get the point. But what if this amount of Res 1 is too low and the government has a target pushing hard for Res 1, so it's too low, and it pushes for another target, Res 2. So we have this minimum renewable energy supply target, which is the dashed orange vertical line that you see on the chart and the furthest to the right. Now, if that were the case, you see we've pushed the whole supply stack to the right, and now the price is down at P3. Notice that we've gone an energy price from P1 to P2 to P3, okay? And at P3, we're below the LCOE that we need for the photovoltaic plant to basically be able to break even. So how would a green certificate price work? Well, the answer is you'd be looking for it to give you something to basically make up the difference between your LCOE, which is the P2, so P2 and whatever the expected realized price in the market, which in this case would be a P3. So basically the price for a green certificate under these circumstances would be P2 minus P3, okay? And I've been arguing, or in certain other contexts, I've said, look, it'd be a good idea to use this type of system if you're really targeting a certain proportion of energy for say 2030 under the PNIEC, because if you just target capacity and you get that capacity figure wrong, you're going to get, first of all, you're going to get perverse incentives because people are not going to want to participate in the market. They're just going to wait for the auctions. So everyone will just sit on their hands. Or alternatively, there'll be a sort of situation where you will overhit the mark. So if the government implements the capacity according to the PNIEC, I think there'd be absolutely no doubt that the prices will collapse, totally collapse. No doubt whatsoever in my mind. But at the end of the day, I'm not that negative about it because I think of the auctions as being, or the targets under the auctions to be an option. So the government, depending on whether it's making progress towards its goal or not, which will require periodic review and reports back to the European Commission, we'll see whether we're on the right track. But anyway, that's for another story. Right. I'm about to finish. So my final thoughts are, there are other ways in which you could be making money. Be aware that there has been a lot of focus, obviously, in the day-ahead prices. But now that we're on that particular subject, be aware that right now the ranges between 0 and 180 euro per megawatt hour. But there's already a proposal on the table to increase the range. So we'll go from minus 500 to positive 3,000 euros per megawatt hour, which will take us closer to what's going on in the rest of Europe. As a specific example, in Spain, we never even saw 1 hour of zero prices this year in COVID, but because during the COVID lockdown, the first COVID lockdown, in Germany and France, we saw prices, more than minus 60 or minus 90 euro per megawatt hour. So I think this is a good move. I think it'll wake people up to the fact that they need to be thinking a little bit outside the box. And again, it reinforces the fact if you haven't already spoken to Red Electrica or heard them talk about this, we need flexibility at the point of production. Okay, so look beyond the plain vanilla PPAs and the government auctions. I'm not saying that you shouldn't, look at those, but I'm just saying, look, maybe there'll be additional flexibility, which you should be trying to value appropriately, right? Not correctly, because at the end of the day, it's all about uncertainty. And then so at the end of the day, do the math, right? But then the only thing I would say is don't expect the lenders, banks, in other words, to get too excited about these type of options. If you were to ask them, the chances are we'd end up calling this an equity play. But I'll leave it at that for now, and I'll pass back to Lorena.
Thanks, Kim. Lorena is not here, so I'm will help you round off the session. She's already with the next speakers for our bifacials.
No worries.
We are 1 minute late, but and with no questions. So perhaps my question would be, before we round off, if you can give a couple of seconds. You say look beyond, like the vanilla things. Are the IPPs in Spain looking beyond already? Are most of the players looking at the new products or at the market products that you mentioned, or is it still under monetized? What is your experience?
Well, that the focus is on the day-ahead prices is obvious, because that's where most of the value lies, right? But we are coming. But I think the industry is educating itself. If you go and ask the operators of thermal plants, they know everything there is to know about ancillary services and how to take advantage of flexibility, a locational issues, nodal constraints, everything. Whilst I think PV guys are still coming from the history, if you will, of a feed-in tariff, right? So ultimately, it's about ticking boxes, not about being fully flexible. The market model, the business model of 10 years ago, 15 years ago, when we were doing photovoltaic, is quite different to what we have to be aware of today. That's really what I'm trying to emphasize. Open the door. There's light at the end of that tunnel. That's all I'm saying.
All right, Kim, thanks for that. And we live on that positive note. Thanks, everybody. You can start joining the next session. We are already started. And then, Kim, we still have a very last minute couple of questions, but we will give those to you later, so you can still respond to the audience. Thank you very much, and see everybody in the next session.
Thanks, everyone. Thanks, Marcel. Talk to you later.